Cryptocurrency is a speculative market that many investors are hesitant to invest in. Should you go all in on Dogecoin or just Bitcoin? It can be a daunting market if you don't know where to start. I believe one of the easiest ways to invest into cryptocurrencies is using your retirement funds. You don't have to worry about making large sums of money, as your retirement investments will give you the safety needed as well as diversification within your portfolio. In this video, I'll go over how investors can use their retirement funds in order to invest into cryptocurrencies. What's up, winners? My name is Naam. If you're new here, welcome. Here we talk all things personal finance. Start now by subscribing so you don't miss out on any future videos. So in today's video, we're going to discuss about why diversification is important, what is Bitcoin or cryptocurrencies, and how to invest in them using your retirement funds. So first off, let's talk about why diversification is important whenever you are planning for retirement. So in a nutshell, diversification is just a way to set up your portfolio to reduce risk but not putting all of your eggs in one basket. For example, this means that you can be investing into different assets such as stocks, bonds, real estate, and as for the purpose of this video, cryptocurrencies. One of the key aspects of diversification is to maximize returns by investing into different assets that may not be correlated. For the majority of us out there, if you are working in a job that offers a 401k, then most likely your portfolio is already diversified, meaning that there should be a portion in stocks and probably a portion in bonds. Depending on how your retirement funds is set up, it can be invested in a whole bunch of different things. But one thing that most financial professionals can agree on is that diversification is probably one of the best ways to reach your long-term financial goals while minimizing your risks. So let me give you guys another example. A general rule of thumb that many financial planners use is that as you grow older, your investment style should be a little bit more conservative. The main reason behind this is that if your portfolio does take a significant hit, you would need more time to recover. So in essence, if you are younger, you can be more aggressive with your investment style because you do got time on your side. You can wipe out hundreds of thousands of dollars from your retirement, and it can take years before your portfolio recovers to where it once was. The key thing with diversification is not to maximize the highest returns or gains, as the youngins call them, but the primary goal is to reduce the volatility in the market. As you get older, you want to keep as much money as you can possible, rather than risking it because time is not on your side. So by now, you guys have an understanding of why diversification is important. Now let's move on to what is Bitcoin or other cryptocurrencies. The explanation of Bitcoin can be very technical, but I try to dumb it down as much as I possibly can. So in a nutshell, Bitcoin is just a digital currency that can be used, traded, and held electronically. You can use Bitcoin and other cryptocurrencies to purchase things online as you would with a credit or debit card. Bitcoin and other cryptocurrencies are becoming more and more popular, so more and more vendors are accepting them as a form of payment. In recent news, Tesla announced that they are going to be accepting orders that are being paid with Bitcoin. As of right now, anybody can hold Bitcoin anonymously, as it does not require any personal identifiers. Bitcoin and other cryptocurrencies are being bought by many investors, such as the little guy on Wall Street bets, all the way up to hedge funds. Bitcoin is one of the most popular cryptocurrencies out there, but there are hundreds, if not thousands of them out there. But to be completely honest, there are plenty of cryptocurrencies out there that are complete garbage. One of the biggest things that are going for Bitcoin and other cryptocurrencies is that it is decentralized. You can send Bitcoin directly from person to person on the blockchain, and it cuts out the middleman. This is a truly decentralized way of conducting money transactions. Traditionally, you can buy cryptocurrencies on crypto exchanges, such as Coinbase, Genesis, Binance, and many other stock brokerages may allow you to buy cryptos as well, such as Robinhood, Webull, and Cash App. So now you guys have a quick backstory of what Bitcoin and other cryptocurrencies are. So now let's talk about the hype with cryptocurrencies and why you may suggest investing in them. One of the key factors that Bitcoin has going for it is supply and demand. Bitcoin has a theoretical supply of only 21 million coins, and the way that the price increases is just supply and demand. Since the supply of Bitcoin cannot be increased, the value was unaffected during the pandemic, unlike other currencies that fell due to money printing. Many have compared Bitcoin to internet gold, as it is a store of value. Within the past year, Bitcoin has grew over 400%. Since you guys now have a background on the importance of diversification and the hype around Bitcoin, let's move on to discuss how exactly you can use your retirement account to invest into Bitcoins and other cryptos. The first thing that you must know about retirement accounts is that whether or not you have the ability to be self-directed. The majority of the times, whenever you are invested into a 401k or something similar, your employer may just offer you a bunch of different types of funds that you can invest in. If there is no option for you to pick your own mutual funds or stocks individually, then you would want to open up a separate IRA or roll it over to something else. I will show you exactly how to do this in a little bit. But either way, if you do have a retirement account that allows you to select your own stocks or funds or you decided to open up your own personal retirement account, this is how you can invest into cryptocurrencies using your retirement funds. Probably the easiest and quickest way to invest into Bitcoin and other cryptocurrencies is buying trusts from Grayscale. Grayscale is actually one of the first cryptocurrency asset managers that you can purchase on the stock market. So at the making of this video, there are a few trusts that you can buy. To name a few, you can invest into Bitcoin, Bitcoin Cash, Ethereum, Ethereum Classic, and Litecoin. They also have a large cap fund where you can invest into a bunch of different types of cryptocurrencies. But either way, you can buy these investments directly with your broker. After reviewing a different type of brokerages, you can buy this off Fidelity, Vanguard, and TD Ameritrade. I did double check M1 Finance and Robinhood, and unfortunately these platforms do not allow you to invest into these funds since it is over the counter. Another popular stock trading app, which is Webull, is an exception because they offer the Bitcoin Trust, but as for the Ethereum and the other cryptocurrencies, they do not allow you to trade it on their platform. On the topic of Webull, if you guys want 2 free stocks valued anywhere between $8 to $1,600, I do have a referral link down in the description. The one thing to make note of about investing into Grayscale Trusts is that they do have a 2% expense ratio built into itself. So it may be a little bit costly compared to other ETFs or funds. Now let's talk about individuals who do have a retirement account but is not self-directed, meaning that you do not have any control of individual stocks or funds. A great option that you can do is roll over your account into a Bitcoin IRA. So as little as in a few days, you can convert your 401k or any other retirement account to buy Bitcoin. Some of these retirement accounts includes 401ks, Roth IRAs, regular IRAs, 403bs, 457s, and also TSPs. The one thing to make note of is that whenever you do roll over any type of these retirement accounts into a Bitcoin IRA, it is treated exactly the same as a regular retirement account, meaning that you cannot get access to these funds until you're 59 years and a half. So just double check what kind of investment account that you do have to see if you are eligible for a rollover. A common question that many people do ask is that can I just roll over a portion of my retirement account rather than the whole thing? And the answer is yes. IRAs and other retirement fund rollovers are not just all or nothing. You can roll over just a portion of your funds into another retirement account. The great thing about rollovers is that this is a non-taxable event, meaning that if you had a 401k where you put in a certain amount of money every single month into this account, this is just pre-tax money, which means that you have not paid any taxes on this money whatsoever. The same thing applies to whenever you roll over a retirement account or a portion of your retirement account into a Bitcoin IRA. One of the most popular Bitcoin IRAs is bitcoinira.com. But there are some fees associated with this company. So on their FAQ page, there's an initial one-time service fee depending on your investment amount, and there's also a minimal custodian and security fee. So depending on how much money that you want to roll over, just make sure that you contact them first to get an estimation. Based on their website, you can invest into Bitcoin, Ethereum, Litecoin, and a few others that I'll post over here. They also have a list of retirement accounts that you can roll over to a Bitcoin IRA. I'll list them over here. But the caveat is that there is a minimum of a $3,000 investment amount and the account is treated as a regular retirement fund, meaning that you cannot withdraw any of your funds until you reach the age of 59 and a half, or you get hit with early withdrawal tax penalties. One thing to keep in mind is that once you withdraw funds from your IRA, whenever you do retire, this is a taxable event and you would have to pay taxes then. As a side note, this only applies to retirement accounts that are not after tax, such as a Roth IRA. Once you have your funds into a Bitcoin IRA, then you can trade your digital assets as you would like. You can buy, sell, or swap them for any other cryptocurrencies that is allowable on the platform. So if you guys are interested in opening a Bitcoin IRA, I do have a link in the description of where you can sign up. Now let's move on to the last way of investing for your retirement. This is where you would just invest your after-tax income into an investment portfolio. There are plenty of platforms of where you can buy cryptocurrencies, and some of the easiest ones are Coinbase, Cash App, Webull, and Robinhood. This will give you the most control of investing without the strain of waiting 59 years and a half to withdraw your funds. But this is no different than investing into regular stocks. If you are thinking about trading cryptocurrencies, you got to think about capital gains. This is the price difference between the price that you bought it at and the price that you sold it at. In the IRS's eyes, this is a taxable event. So if you bought Bitcoin at $30,000 and sold it at $50,000, the $20,000 gain is liable to capital gains tax. And this will also depend on how long you held the asset for. If it was more than 1 year, then the capital gains is much less. If you bought and sold the asset within the same year, then your tax rate would just be the same as your income tax bracket. Now let's talk about how much of your portfolio should go into cryptocurrencies. As you probably may know, cryptos and other cryptocurrencies is a very volatile asset. So after doing hours and hours of research, a lot of professional financial planners say that invest anywhere between 1 to 10% at most into cryptos. I'm pretty much in the same boat. At one point, I was almost 60% of my portfolio was in cryptocurrencies, which is very risky and a very stupid move of me. But now, personally, I'm sitting at around 2 to 5%. Again, this really just comes down to your risk tolerance. So for instance, let's take a look at Tesla. They recently made some news by buying $1.5 billion worth of Bitcoin. The company currently has $19 billion in cash and cash equivalents toward the end of 2020. So $1.5 billion worth of Bitcoin is roughly around 8% of cash on hand. So just take that into consideration compared to a large company who is willing to risk a percentage of their cash into a volatile asset. So let me give you a real life example. Let's just say that you wanted to invest $500 a month into a retirement account. 1 to 10% of $500 is $5 to $50, which may not seem that much right now, but when you really think about it, you are investing for retirement and for the long run. So depending on your age, whether you're 20 years old or 35 years old, you're going to be investing anywhere between 30 to 45 years. As for which cryptocurrencies that you should focus on for your retirement, I would suggest the key players with the largest market cap. I would say Bitcoin or Ethereum, but again, it's really up to you and your risk tolerance. As the disclaimer, this is not financial or investment advice. This is just for entertainment purposes only. The key reason why I say stick with the big players is that there are hundreds and hundreds of cryptocurrencies out there. And the majority of them out there are going to be crap and probably going to go nowhere. So for me, I'm pretty conservative, so I just stick with the large market caps. When it's all said and done, investing into cryptocurrencies can diversify your retirement portfolio. So whatever different asset classes such as stocks, bonds, or real estate goes down, cryptocurrencies and other asset classes can counteract that. So if you are looking to diversify your retirement portfolio, it's not that bad of an idea to risk a small percentage of your retirement funds in crypto. If you guys haven't already, make sure you give this video a like because that really helps support the channel. I'll see you guys in my next videos.